What's up everyone, and welcome to another trade explanation video here on Leutheria. We're going to be talking about a Bitcoin trade that I talked about on our global Telegram channel. And if you're not already part of our Telegram channel, you can check out the link in the description below where you can join that for free. And we talk about different trading opportunities in the crypto space, as well as news, educational resources, live community chats between all of our members, and a ton of other really fun and exciting stuff. So definitely check that out and join that. In this video, we're going to be talking about a 4-hour trade that I took on Bitcoin. And it's one of my favorite setups actually. And this is honestly a trade it's very simple. The actual setup itself is very simple. And then the trade itself is very clean. So what we're going to be looking at is the price action in this area right here. So what we have is we have this push up in price, then we come down, and then right here we have a consolidation period where we change the trend to be in the bull's favor. So we have a low, high, higher low in comparison to this one, and then a higher high with 2 candle closes. I mean, we have more than that, but at minimum you need 2 candle closes above the key high from the original high that you're breaking on the breakout for this to be a valid bull pattern. Now when you see that, this candle right here, this one, becomes a support zone for price on a retest. And so we take a rectangle, which you can find right over here on your TradingView toolbar, and you can see it's right here. If you favorite it, if you click the star, you can actually just click the stars on the bottom of your toolbar here, and then it pulls up your favorites, and in there you can see I have my rectangle, so you can also do it that way if it's easier for you. So now we have this rectangle, right? The price comes down in this level. You can see right here it was trying to react to this as support. But what happened on the subsequent 2 candles that followed was we pushed right through this zone. So this candle right here very clearly pushed right through this zone and closed far below it. The next subsequent candle closed below it as well. And as soon as we saw that, this is signifying, okay, this gray level that should have been support just got pushed through. And this is a valid support level because this is the last down candle before, this is the last place where people were selling their Bitcoin before this rise in price that confirmed a bull trend. And then we broke down from this level. Now when we broke down from this level, what this is telling us is this should now act as resistance. This gray zone should now be resistance because this is a valid zone. This is a valid support zone that should have held right here, but it did not. And so now when we go into it, right here, boom, the price rejects off of it pretty quickly and emphatically with the very next candle printing a profit potential of 4.6% just on one 4-hour candle. So how do you play this? So the way that I played this was right here when I was looking at this price action. Why did I not buy right here? It's very simple actually, and the same reason why unfortunately I just missed the trade right here. And that is because of my rule that I do not enter on the first support zone after a bearish divergence in the RSI. And you can see right here we have a higher high right here. Here's a higher high. And on the RSI, we have a lower high. And that's a bearish divergence. So that means the bears were losing momentum on this rise in price. And subsequently, that's why we saw this drawdown in price right here. So I did not buy right here. What I did was I waited and waited to see if this setup played out where we got those two, where we pushed right through it without bouncing off of it. So this is what it should have done. This is what should have happened in the level. If we didn't have the bearish divergence in the RSI, it probably would have bounced. We would have came down here. We would have bounced here. And then maybe we go through it, right? But we didn't bounce off of it at all. We just, boom, went right through it. And so because we just went right through it, now when we come back into it, this is the entry right here. And then we reject off of it. So the way that you play this is the way that I play this, because this is for educational purposes only, is not intended as financial advice, is I personally wait for the second candle to close below the level. So right here, when this candle closed, I was scouting the entry knowing that this is going to become a resistance level. So what I did was very simple. I took my short position tool right here. I clicked that inside of the zone. Let's just pull this over a little bit. I knew I was going to put my stop loss at the other side of the zone, so that's right at the top here at 57,141, and you can put your cursor over the candle to see, and it's right where the H is. That tells you where the high. So it's 57,141.05. So I double click on that, come into here, 57,141.05, click enter. So now my stop loss is oh, that was my entry price. I'm sorry, hang on one second. There we go. So now our entry price, now where are we going to enter the trade? So this is the other thing you need, right? So we have our stop loss in the right spot. Where is the entry point? So the minimum entry point for this to be this level to get tested, we need this price right here to get broken. So the candle right here, the high of this candle is where my order was. So this top of this candle, if we break that high on the next subsequent 4-hour candle, that means that this inside bar has now been breached to the upside, and this is a low, and we're testing this as potentially setting a high. So this is the price that we're going to enter. We also have the option of just entering very simply on the bottom of the body of the candle. And that was the real entry. You can see that was the strong. So whenever you have a support or resistance zone, the body of the candle is going to be your strongest area of support or resistance. That's going to be where the most volume occurred in that trading period. So that's where the most significant level is going to be. And you can see that you could have entered right there. So let's say that we entered right there, just for simplicity's sake. That is at 56,578.21. So we click enter, and now we have our entry and our stop loss exactly where we want, and you can see it's a very tight stop loss, less than 1% away from entry price. So we really need this level to hold if we want this trade to for us to not get stopped out of this trade. So now where do we target? Where are we taking this trade to? Well, there's a couple different ways you can play this. You can go to the higher time frame. We're just going to turn this off of the daily. So on the daily time frame, what we can do is we can say, well, where is the closest support level that this is going to push into? And we know that this level right here is our support zone. So this is from our bull trend right here, where we had a low, high, higher low, higher high. Same exact pattern that we talked about on the 4-hour, but on the daily. So this is where we could take profits, right here. So what we can do is we're going to change this to blue so we know when we go back to the 4-hour time frame what we're looking at. So now when we go to the 4-hour time frame, there's a couple different ways we can play this. If we are talking about the daily being the support zone, we have the wick of the candle, which is the top part of the rectangle here, and then we have the body of the candle, which is right here. So let's put one of these right here, and we're gonna turn this green, so we know that this is where we're gonna be taking profit. Both of these levels right here. So now let's go to the 4-hour time frame. So if we were to take these two take profit levels, and let's say that these were the levels that we were going to take profit at a minimum. We can pull this up and we can see that even if we took those two levels, the midline of those two levels, which is about 2.75% away from our entry price, we'll make 2.75%, which is 2.76 risk to reward ratio. So that means that we'll make 2.76 times the amount of money if the trade goes our way and we take profits down here than we would if we got stopped out of the trade. So this is a good risk to reward setup, even if we just went to those levels. But let's say that we wanted to look for a lower take profit level. We could look down to the 12-hour support level down here. And we could say, well, this is the next, main support level for us. So let's take the body of that candle. So we can take the body of that candle and we push it down to there. So now that brings us down. And we could say that, if we took profit there, that's about a 4% profit potential. And that's about a 4 risk to reward ratio. So that is how you can kind of start to look for where you're going to take profits. Is you can use like support or resistance levels. You can use, other indicators like the Ichimoku cloud, although there wasn't really much going on in there for that. You can use the pivots. So you could say, I'm going to take profit at the pivot level right here, which was, right around 54,600, which was about 3.5% away from entry. But even if you took the topmost level, the closest available support level, you still have a 2.45 risk reward on that trade. So that's still a good trade to take, in my opinion, because you're getting over a 2 risk reward. So that's what and then all you do is, what I would do is I would set a limit sell order to go short on this pink line. And then I would set take profit limit orders to buy the position back, because when you're going short, you're borrowing some of that asset, and then you have to buy it back at a later date, either at a lower price, meaning you profited because it's cheaper, or a higher price, meaning you're taking a loss. So in this case, I would set a take profit limit order to buy my position back. Maybe you could even layer in these orders, meaning that you could set one here at the top, because you don't know where it's going to bounce. So what I like to do is I like to take some of my profit off at one level, some of my profit off at another level, and then some of my profit off at another level. So I'll take some off here, I'll sell some here, or I'll buy some back here, and then I'll buy some back here. So what that does is if I do an equal percentage across all three, let's say I do 33% of my position at all three, that you can, what you can do is you can, to figure out where you would be, like the total profit you would make, you can take a calculator, you can add up the prices, the 3 prices right here that you're going to be selling at. So let's just move this up so we don't get confused here. So we have these 3 green prices, so we're going to add those up. 55,195.84 plus 54,846.23 plus 54,300.16. And now we're going to divide those by 3. That's going to give us 54. And we're going to double click on our short tool. We're going to go 54,780. So we're going to go to our profit level, because this is where we're going to be taking profit. 54,780.74. Click enter. So now what this is telling us is, if we take profit 33% of our position off here, 33 here, and 33 here, we will end up closing this trade with a profit of 3.18%. And if you don't know how to use the short position tool, it's very straightforward. And I have a video that you can check out on how to use this tool. It's very simple to use. It saves you a lot of time as well from doing your calculations on how much are you going to enter the trade, your position size, and then like we just used it for, your stop loss, and then your profit potential, and your calculation of your risk to reward ratio. So that's how I played this trade. Very simple setup with a potential support zone that got breached to the downside and then subsequently turned into resistance. We go short here with our stop loss above that zone, because if the zone breaks and we go above this, clearly this was not a valid resistance zone, and so we want to exit the position. We don't want to continue to lose money on the short if we're just going to continue to rise in price, so we exit the position, and that's why our stop loss is there. And then our take profit levels are at the closest available high time frame support levels. So we're trading on the 4-hour, so we can go to like the daily, and we see that our daily level right here is where we're going to be taking some profits in, because that's obviously our closest available high time frame support. And then we have our 12-hour, which is where our last final take profit is. Now you can see the price went past this, and that's okay, because we could have still been in the trade down here. Maybe you set your take profits based on a percentage away from entry. So you could say, I'm gonna take some profits at 5%. So you would wait, and then you would sell some, right around this point here. You could do that as well. It just depends on your personal preference and the type of trader you are. But let's assume that we kept these levels. We would still have a good trade there, a risk reward of about, I just moved it, so it was like 3 point whatever it was. So it's above a 3 risk reward, and you can see that played out very nicely for a nice profit. So that's how you can play these sorts of support resistance flip zones. I hope this video was helpful for you in your own trading and investing experiences. And if you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. If you haven't already, check out our beginner technical analysis course, where we just released it, and it is running for 20% off right now, where you will learn how to make calculated entries like this to generate consistent profit for yourself trading your favorite cryptocurrencies. We talk about a bunch of different components such as trend trading, support and resistance, volume, technical indicators, and a ton of other interesting stuff. So check that out. There's a link for that in the description below as well. And until next time, onward and upward.